right, welcome back in. It's been a while since we've done a video and brought this to you, but we wanted to do a review because it's been a really interesting first half of the year. So, Quint, give us an update. I think the most important thing is the CPI data that we've saw come out in the last couple of weeks. So, what's happening?
Sure. Thanks, everybody, for joining us. Hopefully you find these of value and informative. So the markets have been great this year across a variety of areas. Very narrow, which we'll talk about in a little bit. But nonetheless, it's been positive action. A lot of that, we wrote about this recently, so this is not anything new, but is in response to the decline in the CPI. The CPI just last week notched a 3% year over year. That is down from 9%. That is a significant decline. Now, that does not mean that you're going to the grocery store and the prices are, coming down. Yes, eggs have come down from their level, but it just means that the inflation rate that we saw year over year that was so high is slowing. It's still high.
Right.
It's like if somebody adds 25 pounds, and then they add 2 pounds, it's a lesser percentage.
Right.
So
exactly.
I love how politicians, inflation's coming down. Things are, it's not entirely true. However, the market has been responding favorably to this because, remember the connection, if CPI comes down, that's the Federal Reserve's number one concern, fighting inflation at this moment. They have been raising rates to slow the economy to bring down the inflation rate because that's happening. They're winning. Now, we would make an argument that it would have happened nonetheless, but they're winning. And so the market is getting out and saying if the Fed stops or is closer to the end than certainly the beginning of raising rates, this market now doesn't necessarily have to fight that anymore, and it has lifted off the lows. So inflation down, interest rates maybe down, market higher. Now, the probabilities do say, and you can look at the market probabilities, you can look at the bond market to determine that there's over a 90% probability the Fed will actually raise next week. So a lot of people might be surprised by that. The market will not. The market might be surprised by words. Remember, they have the press conference afterwards, but we'll continue to watch that. But the reality is it's been a great year. However, and we've seen this time and again, it's why we wrote the letter, and you're not out there doing this, thankfully. Most of our clients are not doing this. But if you find yourself getting more optimistic and excited about things because the market's good, we've kind of missed the easy trade, right? The easy trade was back in January and February when things were bad in the market or down, and the market is now advanced. Now that we're getting signs that inflation is cooling, ironically, it's probably going to be a little choppy and harder to go forward to make that great return.
So what are we doing in accounts and things to counteract what's happened?
Yeah. Now, what is good, here's what's really good. And people, the media is painting this as a negative. They're painting the narrowness of the market as a negative. You might have heard people talk about the 7 leading stocks, Microsoft, NVIDIA, whatever. I'm not even going to try to go through whatever. Apple, Amazon, Google, okay, Tesla. However, they're painting that in a negative, like, oh, this is it, and these 7, and that's all. Well, like the 90s, in my opinion, we had stocks that led that advance, the Ciscos of the world, the Intels, of the world, the blue chip companies that had been around for a long time, and very quickly that spread to a vast number of sectors and stocks. That is starting to happen. So the negative implication is that it's narrow, it's not going to last. However, it's the strength is starting to broaden, and we're seeing other sectors, industrials breaking out to all-time highs. Many groups are acting much, much better. We are taking that opportunity to rebalance, meaning going out of some areas that we've been in, sort of saying, okay, we're parking some money here for the time being and spreading it out into those other areas. So despite me thinking and saying, in my opinion, we're going to go through some choppiness, I do still think there's incredible opportunity there in broader areas going forward.
Than just those 7 stocks that have kind of led the way from the beginning of the year.
Absolutely.
So tell us more about what's going on in our firm, what we're doing throughout the end of this year. I know we're reaching out to people, we're touching base, we're calling people, and then we have a new staff member that is probably reaching out and touching base with people too.
Yeah, so many times the market gets a little boring in the summer, and Wall Street tends to take time off. We do not. In fact, we're probably working harder this summer than ever before. There's really two groups of people that we're really making sure we touch base with. Number one is our small business owning clients. The vast majority of our clients are small business owners. You're in the trenches every day. And we're wanting to make sure in this environment that you're maximizing the tax opportunities that are out there for your business, for yourself. There's so many things that can be done when you're evaluating your small business that you might not be doing. And we are trying to do an even better job of getting with you, the small business owner, to say, let's evaluate this, let's look at this, let's think about this, let's fund this, let's do this, etc. I mean, I talked with somebody just yesterday. We did a valuation for the potential sale of the business to unlock the value after all these years. So number one, we're doing that. Number two, we've talked about this already, but we're going to be reaching out, if you've not heard from us already, about Roth conversions, accelerating Roth conversions. And that's simply taking money out of IRAs, converting them into Roth, paying tax now so that you never pay tax again. Those are a couple things we're looking at. Now, I'll get to the staff in a minute, but why are we doing this? I want to be very clear, and you're going to start to hear us talk more about this and write more about this, and I don't want to go too far in the weeds here, but if in fact we've hit a top of the interest rate cycle that we've gone through, it's very important to understand. And yes, market's predicting a raise next week and maybe even one more. So I know we're early in this. It's not next Tuesday.
Yeah, but the Fed's not raising 75 basis points. They're not doing these huge raises that was going on last year.
We're in the ninth inning, and it's tied, and we're in extra innings.
Right.
That's, in my opinion, where we are in the interest rate cycle. Now, remember, the interest rate cycle of hiking tightens the dollar. It tightens money supply. So the dollar, in my opinion, United States dollar, in my opinion, is near a top. Okay, it's been very strong for a long time. It's near a top. Doesn't mean it's falling off a cliff next week. Very important. We might do a webinar on this whole thing because it's about time we did one. Mm-hmm. If, in fact, that's correct and the dollar starts to ease over time, and I want to keep stressing that, over time. It's not going to be quickly, but over time. There are certain asset classes that are going to do, in my opinion, much better, that have not been doing all that great. We've talked about them before. We won't bore you with them today, but that's why we're doing some of the things we're doing now. Roth conversions, funding retirement plans, making sure we're appropriated for taxes, because there are opportunities out there that we see that, candidly, I haven't seen in a very, very long time. No, I'm not talking about the AI article that I wrote. Getting a lot of positive feedback on that. Appreciate that. But I'm talking about broad sector and markets as a whole. So stay tuned for more information on that. I'm excited about the future. Now, if you've not yet talked to Allie, our CPA MBA superstar, A. Howard, as I like to call her, she's been fantastic, been with us now for a few months, really dove into the team, helping us with tax planning. She's, again, a CPA, has been in the public accounting world. She's fantastic. And then a new individual joining our firm, Georgia, will be helping Linda and Abby out in the client service area. She will join our firm at the end of July. We are so happy to have her. She comes with great experience in the financial industry. She's going to be wonderful. You'll be hearing from her as well. So the team continues to grow. A lot of work going on at Joule. Just exciting things on the horizon.
Yeah, it's been an exciting summer. We're hoping you guys are having a great summer out there and hopefully avoiding all this crazy rain and weather, no matter where you are.
But it's been good for the garden.
It has been good
My
for the garden.
tomatoes are fantastic.
The tomatoes are probably very, very happy.
Yes. But we're rolling into the fall, and you know what that means.
Football.
Football season. So let's go, Cats. Make it a great day.